Good day, AVZ Traders. I trust you are well. Welcome to broadcast number 55. Now, traders, as I have said to most of you during the coaching sessions and some of our interactions, the thing that you need to do with this video broadcast is as soon as I have released it, within the 2 days before the next one comes out, make time just to listen to it once at the very least, because you will find new insights, your reprogramming of your neural constructs of the way you process things, your visual processing will continue to change bit by bit, bit by bit. Do not store them up because they might become overwhelming. So just do that. Watch everyone as it comes out within 2 days. And then the other thing that you can do is decide which of the strategies you want to specialize in. Strategy number one at the open, or strategy number two. Then you can go into our video library, hashtag AVZ strategy one, hashtag AVZ strategy two, hashtag AVZ strategy one at the open, and then just watch those over and over again. That's what I would recommend, just so that you keep up to it. And they absolutely brilliant. And I'm getting so much positive feedback from the traders that when they really decide that the AVZ of trading is the way they want to go and start to dig in to the material and the coaching videos, light just shines and they begin to make money. Now, the reason I'm saying that is I don't have silver on my watch list, but what a beautiful market. I've got gold, and there's nothing wrong with having gold and silver on your watch list. And I think this is pretty insightful from the trader. If you trade an Asian session, I mean, for the open, you got Nikkei 225, you've got Hang Seng 50. You can trade gold, you can trade silver, you can trade yen currency pairs quite easily without worrying about country specifics coming into place. As we said, of course, you can trade anything at any time, but just be aware before country specific exchanges open, you have low volumes, irregular volatility, high spreads, etc. Now, this is a silver trade that was brought to my attention. Absolutely pristine and very simple in the way that it presented itself. So, high of yesterday, upper AVZ sell zone, low of yesterday, lower AVZ buy zone. Market, and there's a mid zone, indecision. Market opened in between indecision and low of AVZ. You just gotta wait to see what takes place. Are the bulls gonna say, hang on, these asset values are too low for silver? We think silver should be highly valued and start to accelerate up. And of course, they want to get to the heavens. Or the bear is going to say, absolutely not. This particular asset is highly valued. We're going to decelerate the price to zero from 55, 56, 54, 53, maybe one, so we can get out before it crashes completely. Anyway, so we opened up, went sideways, still market not decided until we start to get bull trend candle, just breaking out above the high of session. Bull trend candle, beautiful bull trend candle for the bulls. Again, just breaking out above the high of the session. You can see above high of session, high of session. This is good for the bulls. And now you're still watching. Okay, if this is what's taking place, am I getting strategy number one? Well, if you were down here in the buy zone and you got this kind of structure, you would easily argue, okay, Dr. George, coming from the lower AVZ, bears want lower prices to collapse beneath here, but they failed. Now the bulls are going to push price up. So if this is taking place here, you can argue this is strategy number one. But of course, you don't want to take that because we're barely breaking up about above that. That is very good for the bulls. Okay, then we get follow through. Now, again, if this was taking place in the lower AVZ down here, you could happily jump in and say, strategy number one, I'm going to buy. Got my follow through, more than 3/4 of the body above this kind of blah, blah, blah. You could jump in and do that. But it is not strategy number one because we are at the middle AVZ. Now, guys, if we go back to the course notes, and a lot of times I've spoken about strategy number 2. I mean, this is pristine. This is as if I've scripted this particular movie. We said we only want to trade through the middle AVZ of indecision, strategy number 2. There we go. The market is going up. There is a test of the average prices. We are into strategy number 2. You just have to prepare to take this. Okay, so let's prepare to take this. Say to yourself, okay, let's see if strategy number 2 takes off, how far the bulls have to go. Now, there is my leg 1, leg 2. Now you guys know how to use that. There is a beginning of the first leg. If you want a tighter profit target, you're going to put it just there at the breakout and say, okay, that's the tightest profit target, for the bulls. If you want a little bit wider, go to the end of the bull move. There is the end of the bull move. You can see your profit target goes up a little bit. But you're happy to take that. The strategy number 2, you have to take the trade. All right. Now, you want to buy above this beautiful test, as beautiful as it comes, right? You want to buy this. I mean, this doji is also a test of average prices. So you'll be prepared to want to buy here. Okay, that was the first time you're prepared to buy above here, but you are not triggered above there, so you wait, and you want to buy above here. Now, if you want to buy above here, there is your entry, the high, right there, and you saying, okay, if I'm going to take 50% off, I want to remove half the risk at a technical level, and that's where it should be. Then, of course, I look to the left, so I don't want my stop to float above a decent breaking up trend candle. So I just pull my stop down. My stop is going to have to be there at a technical level. That's where my stop is going to be. Beneath that, I've adjusted it to the technical level. I talk about this over and over again. So if you take that, if you trigger it into the trade, that's where you take it off. But you wait, you don't get triggered. Now, it is possible that you're watching this, you see the market going up, that ask line, you must always have your ask line activated in the market. What is the ask line? That is the ask line, okay, that purple line, because the price is somewhere within there. The ask is where we're going to buy. Let's look at that pretty quickly. You need to have it activated. Right click on your charts, go to properties. Then under colors, you will see your ask line. Mine, I've put it in magenta, which is that color that you have there. You can use whatever color works for you so that you can see it, because that shows you the difference between where the candle actually is and plus spread, where you're actually going to be triggered into the trade. If you don't have that, you're going to say, well, let me buy above here. And you actually find, hang on a second, I'm triggered into the trade here. Why is my entry price so high? That's because of spread. So when I say spreads widen, when there's news or outside of index specific hours, that is it. So you must always have your ask price. The reason for that is that all the candles on MT4 are showing us the bid price. Okay, if you're going to be selling, that's it. That's where the price is. That's where you sell. There is no other little spread thing taking place there. All right, so let's just leave it at that. I'll probably do an example when markets are live at some point. So you try and get in above that, but you don't get triggered. So let's say you didn't get triggered. It might have just moved above and you hit buy, perfectly fine. You are in the trade, move off the risk. But if you waited and that didn't trigger you, you look at it and say, well, okay, that's interesting. Bulls failed to get out above that, so I got to wait. If the bears are strong, they're going to have to break out beneath the low of this beautiful bull low test candle and maybe go sideways or accelerate down. But they failed. So hang on a second. The buy setup for strategy number 2 is still valid. I've got to look to take that. As soon as the market starts to get above that, you enter live into the market. Okay? You enter live into the market. Now, I have said if you are not triggered in, don't place an order above it, because the bears might come and sell, give you a beautiful bear candle. If you got an order and you've gone away to grab a cup of coffee, You won't see that bear trend candle that's taken out that low. The bulls might come back, attempt to accelerate up and fail, and you get triggered into a trade that you don't want to be in. Okay, so if you're not triggered in, you gotta go do what you gotta do. But if you're in, you watch and say, oh, hang on, you got an inside candle, something wrong for the bears. This is still valid. The market starts to go above that, you can buy that and get into the market because you are hoping that the bulls are strong enough and the probabilities are stakes in your favor. Now we're talking of 75% probabilities. We are hoping the 75% is taking place now. 25% might fail, can still fail. That's why we have a stop in the market. Okay, nothing's 100%. Very high probabilities. So once you're in, remove after risk. You get that from the bulls. That is fantastic. Now you want follow through. I'm like, come on, guys. I mean, you got so much opportunity. Why am I not getting follow through? When you don't get follow through, you find somewhere to tighten your stop. Your stop was at half the risk here. Can I move it without disrupting things? Yep, the stop was there. Then now you can tighten your stop to beneath here. Okay, a little bit of a loss because you're expecting the boost keep going up. Bulls follow through, good enough, breaking above the high. Okay, then you get a doji, then you get a bear candle, and it's like, hey, what is happening? Now, again, you can move your stop to beneath here or just beneath this candle. You can never on the candle, but beneath it. Because this is pretty disappointing. You're expecting acceleration. But then they test the average price and they give a beautiful signal. So now you're saying, okay, I might just get to my 1 times risk reward. Okay, we're following this black leg 1, leg 2, and we use this black measured move. So you can see there is a profit targets. Now, some of you want to take profits. You take profits just beneath the profit target. Bank your 1 times risk reward. Happy. Everyone is happy. Money in the bank. Pristine, easy way to make money. But if you're like me, you hang in and say, oh my goodness, we're right there. There might be the opportunity that the bulls want to keep going up. They give you a beautiful candle. They follow through by that time. Now you can put your stop to here. You get the follow through. Bit of a disappointment with that tail on top. You are past the risk reward. So you can tighten your stop to here. And you likely get stopped out there just at 1 times risk reward, maybe a little bit more. But if the bulls had been strong, whatever they did later on, they could have done it here into the heavens, money in the bank. Okay, so could have taken that entry. That entry there is a second entry, but it's beneath the high of today. It is best to wait. Had it been above the high of today, you could say, okay, I missed that. I got a little bit of profit taken. Happy to take it less than 1 times risk reward. I'm going to bank it in case. But remember, if you are taking a valid trade, when you got less than 1 times risk reward, the probabilities are reduced because of this invisible barrier. It is best to wait and see what happens. You're watching all of this and say, oh man, I didn't take that. I should have taken that or even that, blah, blah, blah. But now you get that. What do you do? Well, the market is going up, guys. The market is going up. So you start again and say, okay, maybe the first leg is the bulls going all the way up to here, there. Okay. And that first pullback was there. Now they give us another pullback and they say, it's a little bit higher than what we have. And I like that setup. So I am going to take that. If I get in above that, now this is forming, right? Remember I've said to you, if it's forming, unless it becomes a big bull candle, you got to prepare yourself and say, okay, if I get it and I'm going to get above here so I can use that just to get myself all set up, that would be fantastic. If it gets bigger and bigger, I'm not interested, but that is good enough for me because it gets, it's jumping up and down, it gets just to my 1 times risk reward. Okay, 50% off is there. There's a 50% off, but I don't want to float my stop, right here. So I'm just going to bring my stop to beneath that candle there. That's it. So my target is within the 1 times risk reward of this first leg. So buy above here. Absolutely nothing wrong with that. As soon as you're in, remove off the risk. We smash right through that initial 1 times risk reward. We have a follow through candle. and you're happy. Now your stop was initially there. You can put your stop to here. You have a follow through above that. Fantastic. Put your stop here. You are just short of 1 times risk reward. You get a dodgy. If you're still in the trade, you got to pull your stop up because we are now in the sell zone. If the bulls are strong, they're going to just keep going up. Okay, that's what they'll do. But if they're weak, like they went sideways, you bank your money. You've already achieved very high probabilities. Strategy number 2. Now, if you had taken that, and by the time that sets up, your stop is here, that trade is already at break even, guys. You're not going to lose anything. If that sets up again, you have to take the trade, get into the market, add into the market, because that's already at break even. Okay. Your stop is already there. You're not losing any money on it, but it sets up again. Get in. When you get there, man, you're going to smile all day because now you have 2 times risk reward. You got it from there and you got it from there. Easy money. You waited a week, 2 weeks, and when it rewards you, you get 2 times risk reward. You bank the profits. All right, guys, I trust you enjoyed this. This is silver, absolutely fantastic. Thank you to Trader M for bringing it to my attention. All right, guys, take care. I shall see you in the next bro.